Let's go to Peter Cook in Washington.
The recovery is proceeding at a moderate pace, Tom. The Fed's latest statement does have new language on inflation. The $600 billion in bond purchases will be completed in June. Specifically on the economy, the economic recovery is proceeding at a moderate pace, and overall conditions in the labor market are improving gradually. Household spending, business investment in equipment and software continue to expand. On inflation, inflation has picked up in recent months, but longer-term inflation expectations have remained stable, and measures of underlying inflation are still subdued. The statement goes on to say increases in the prices of energy and other commodities have pushed up inflation in recent months. The committee expects these effects to be transitory, but it will pay close attention to the evolution of inflation and inflation expectations. Again, with regard to the bond purchase program, will be completed at the end of June, and will continue to invest principal payments. The language here, the committee will regularly review the size and composition of its securities holdings in light of incoming information, is prepared to adjust those holdings as needed to best foster maximum employment and price stability. The extended language remains in the statement, and the vote here was unanimous. And Tom, as you know, we'll be hearing from the Fed chairman himself at 2:15.
Peter Cook, nice report. It's a transitory Fed day. Let's go and transition to the transitory Michael McKee. You can see the CME there. The 2-year yield went to a 0.70. It's come back in a little bit. I'm going to call it not much market reaction. Michael McKee, the word transitory there, the idea of a transitory inflation. How transitory are we?
Well, at this point, Ben Bernanke thinks we are regularly transitory, but as Robert Samuelson said, we may be in a demand situation where prices are permanently higher, and that's the gamble the Fed is taking here. Tom, the most interesting thing I see in this statement so far, and I've only given it a quick glance, is that the committee isn't explicitly promising to buy maturing securities, to buy replacements for maturing securities, but says it will regularly review its portfolio and adjust its portfolio as necessary. So there is the possibility they could let some of these things run off, and we could start to see the beginning of a tightening. Be interesting to see how the markets read this.
Michael, I look at this and you look at the tension down there. What is the mood down there about this press conference? Let's go right to that. What is the tone that you've seen in your day in Washington?
Well, the general feeling is one of great anticipation, but in terms of the fact that it's never happened before, but nobody is really expecting Ben Bernanke to say very much, so nobody's on the edge of their chair about any possible revelations coming from the Fed chairman. Everybody sort of wants to see how it goes, see how he does, and then get ready to do this on a regular basis and start looking for clues in these press conferences as to what might happen.
Michael, thank you so much. Michael McKee in Washington.